Internal Revenue Service IRS tax news. Taxpayers must report gig economy income on their tax return. COVID tax tip 2021-21, February 18th, 2021. In 2020, many people joined the gig economy to help make ends meet during the pandemic. Whether it's a side business or a primary source of income, all taxpayers need to understand how their gig work affects their taxes. The bottom line is taxpayers must report gig economy income on their tax return. So obviously in 2020, many people might have had changes to their income structure. So they might have to pick up other types of work, possibly business type of work, possibly gig type of work, in which case you might need to be reporting that income somewhere, possibly on a Schedule C business type of income. If you're new to that, it can be a bit of a confusing type of process because you have this other type of income that you got to report. You got to have another schedule that you need to be reporting it on. And then you need to think about, well, how do I know what the income is? Because if I'm a W-2 employee, it's fairly clear. I get a W-2, I enter that into the tax return, fairly straightforward. If I do gig work or have business income, we may get some types of forms that represent the income that has been earned. Those forms typically being some form of 1099 form. But we may not get forms that are going to report the business income. It just depends on the business that we are in. And we still should be, whether we receive a 1099 or not, report the income on the Schedule C. Now, if you don't report the income on the Schedule C, then what happens is any 1099s that you would have gotten went to you. They also went to the IRS. And the IRS will then probably send you a letter, almost certainly, saying you owe taxes based on this 1099 business income. And the big problem with that, of course, is that if you fill out the Schedule C, you probably have a whole lot of business expenses that would be tied out to or applied to that income, which the IRS does not know about. So if you don't file the gig work in some cases or any kind of Schedule C type business work, then the IRS may try to tax you on the gross amount rather than the net amount because they don't have the expenses. So you want to make sure that you're doing it properly, that you're doing the Schedule C, and that you're picking up the expenses, of course, so that you can lower the taxes appropriately. In that case, deducting any expenses that were necessary in order for the generation of the income. Also, of course, if you have gig work, then unlike a W-2 employee, no one is withholding the money for the taxes. So if you're a W-2 employee, the IRS has pressure on the employer to force them to actually take the money out of your paycheck, before you get it. So you're paying your taxes as you go, typically in that scenario. If you are the business, it's your own business, you're a sole proprietor in some way, shape, or form, then of course no one is taking that money out of the income, and that means that you might end up owing taxes at the end of the year, possibly even penalties because you need to pay typically the taxes on any income earned on a quarterly basis. So then you got to set up your quarterly payment kind of process. Two things that many new business owners struggle with when they start things out with the government, at least. Here's a quick overview of the gig economy. The gig economy is also referred to as the on-demand, sharing, or access economy. People involved in the gig economy earn income as a freelancer, independent worker, or employee. They use technology known as online platforms to connect them with customers to provide goods or services. This includes things like renting out a home or spare bedroom and providing delivery services. Here are some things taxpayers should know about the gig economy and taxes. Money earned through this work is usually taxable. So obviously according to the IRS, if you kind of look at the code here, the IRS general rule for income is everything is taxable unless the IRS says otherwise, right? That's kind of the general rule. So the general rule would be, if you earned income, the IRS thinks it's going to be taxable unless they have some kind of carved out exception for that particular thing. So obviously gig work, the IRS is saying, as your silent partner, wants their share of the money. So there are tax implications for both the company providing the platform and the individual performing the services. So obviously the relationship between the platform and the individuals is not usually a direct relationship such as an employee-employer relationship, which the IRS kind of does not like, right? They would like it to be, what they want, of course, is to kind of force the payer, anyone who's paying the money, to then report as much information and possibly force who they're paying to withhold the money and pay the IRS, such as with an employee. The IRS has the capability of doing that by pressuring the payer, because the payer obviously wants to take the payments that they're making as deductions on their tax return, and that gives the IRS leverage for the payer to say, okay, if you want that deduction, we want you to, take some money from them before you pay it and give it to us, and then also report the W-2 income. But you might not be in that situation as an employee. A less stringent situation would be like a contractor, in which case, again, the provider or the payer may still be required to issue a 1099, but it's a little bit complex with the gig work because of just the structure of the gig work. Also, if you're getting paid through like a third-party platform, such as a PayPal or a Stripe account or something like that, there was some kind of confusion that they're trying to work out in terms of who's responsible for possibly issuing the 1099s in those cases. So it's a little bit more complex with the gig work in terms of the reporting situation. But whether you get a 1099 or not, you're supposed to report the income typically as income. This income is usually taxable even if the taxpayer providing the service doesn't receive an information return like a Form 1099 NEC, Form 1099 MISC, Miscellaneous, or Form 1099K, or Form W-2. So they're basically saying, it would be nice, the IRS would really like the platform to be sending out these forms. Of course, the Form 1099 NEC is a newer form that's going to be, say, non-employee compensation. The other older form that you may not be seeing as much this year is the 1099 Miscellaneous for non-employee compensation. And again, the IRS would probably really like to force them to be W-2, make you an employee, but that would probably be not healthy for the gig economy itself. But from a reporting standpoint, that would be more reporting there. But typically not a W-2. Typically people are contractors, and you may get a Form 1099 NEC or 1099 MISC, Miscellaneous. But again, it's a little complex with the gig economy. So if you don't get one, they're still saying that you should be reporting the income. So activity is only part-time or side work. Taxpayer is paid in cash. So in other words, you might say, hey, look, this is just side work. This is temporary. This is just a supplemental income. So I shouldn't have to report it in your taxes. But as your silent partner, the IRS is like, well, no, like you should report it and give us our share. And then if it's paid in cash, that's the old traditional way that people, the IRS has problems with cash payments, right? The government would kind of like to have everything non-cash because then they can have an audit trail for everything. So even if you're paid in cash, which has no audit trail typically, which is a problem to the IRS, you should be getting you still should be reporting it. And the gig work, because of the complication between like PayPal and these different platforms and people working in different states and even different countries and getting income from different places, has complicated the 1099 and W-2 reporting process for it. Before that, the complication often was for people that were in cash businesses. So if you're like a hair salon, you cut hair, or you're a barber, or you have a place where you have a cover charge or something for bands or something like that, then anything with cash, the IRS is skeptical of in that situation, because again, if you're dealing with the public and not with other businesses, you don't have the same kind of 1099 requirements. They can't really force an individual to 1099 their barber for the haircuts they got during the year, and therefore a barber, for example, doesn't have the same kind of reporting information to kind of double check their income. So that's something that the IRS has been skeptical of for long times. That's why I think they were extra hard on the barbers and the nail salons and whatnot during this whole 2020 thing. They're just anyway. People working in gig economy are generally required to pay income taxes, Federal Insurance Contribution Act or Self-Employment Contribution Act taxes, additional Medicare taxes. So notice that if you're working in the gig economy and then you have to file your Schedule C type of income, then of course you're subject to the income taxes. That's what we always think of. But you're also subject to the Federal Insurance Contribution Act or Self-Employment Contribution Act and the additional Medicare taxes. In other words, you're going to have to pay self-employment tax, which is typically kind of like employee tax or payroll tax. and you have to pay both the employer and employee portion of it, basically. So that's basically Social Security and Medicare. Again, these are taxes that you normally don't think about if you're a W-2 employee, because the employer has already been forced by the government to take them directly out of your pay, and you never really see them. So it's just an informational thing on the tax return. But if you're self-employed, then the IRS is saying, we still want you to pay basically these payroll taxes, Social Security and Medicare, on the net income of the self-employment income. And therefore, you're tacked on not only dealing with the federal income tax, but the self-employment tax. So the fact that you have a Schedule C can actually add a lot of complexity to the tax return, because now you got federal income tax you got to deal with. You got the self-employment tax. You can get half of it's going to be deductible for the self-employment tax. You may have a deduction directly related to the business. So you want to use tax software to kind of help you out if you're dealing with a Schedule C, and possibly, of course, talk to someone if you got to fill out a Schedule C. But independent contractors may be able to deduct business expenses. These taxpayers should double check the rules around deducting expenses related to use of things like their car or house. They should remember to keep records of their business expenses. Special rules usually apply to rental property, also used as a residence during the year. Taxpayers should remember that rental income is generally fully taxable. Workers who do not have taxes withheld from their pay have two ways to pay their taxes in advance. There are these two options. Gig economy workers who have another job where their employer withholds taxes from their paycheck can fill out and submit a new Form W-4. So you might say, well, why would I want to do this? Why would I want to pay in advance? Remember that the government wants the money during the year. They don't want to wait till the end of the year, and they're suspicious that if the taxes build up by the end of the year, you won't be able to pay it, right? So they want the money as the year goes. Usually that happens, for example, in 2020, if you were a W-2 employee, the IRS took the money from you every time they paid you. So you never saw the money. That's how the IRS likes it. But if you have your own business, then they still want it in that format. So they basically want to be paid quarterly. So they want you to write them a check quarterly. The problem with that, of course, is that there's a progressive tax system. The tax rate goes up as your income goes up, and you don't really know what your income is on a yearly basis, which is what the tax rate will be based on until the end of the year. So you have to do some kind of complex estimate of what your taxes will be. And then the question is, well, you could then pay them quarterly, write them a check, or if this is just a side job, you could then go to your current employer and say, hey, look, I want you to adjust my withholdings out of my W-2 wages to increase the amount of withholdings on my W-2 wages to cover the fact that I have this added income with the gig work. Now, they also have a tax estimator that you can look at on the IRS website. You can look into the income tax estimator tool, and it's kind of like a projection tool that can kind of help you out with how much tax you might owe or be projected to owe, and then adjust your W-4 or make estimated payments if necessary. So the employee does this to require that the other employer withholds additional taxes from their paycheck. So the additional withholding can help cover the taxes owed from their gig economy work. The gig economy worker can make quarterly estimated tax payments. So the second option is you make quarterly tax payments. So to cover your gig economy income, to pay your silent partner, to give the IRS the money in the year that you earned it, you can either adjust your W-2 income in your non-gig economy work, if you still have one, or if that's not sufficient to cover it, or if you don't have another W-2 income anymore, then you got to make the estimated payments if you're going to owe any taxes. And there's a link to that here. So they do this, and if you don't make the estimated payments, you might say, well, what happens if I don't? Well, then they might charge you penalties and interest for late payments on it, and and then they'll just tack on penalties and interest. That's how it works. So they do this to pay their taxes and any self-employment taxes owed through the year. So for more information on the gig economy, taxpayers can visit the Gig Economy Tax Center. There's a link to the Gig Economy Tax Center here. There'll be a link to this in the description.